If you look at the brokerage business or that section of it, it's really just a segment of the real estate industry. If you buy it right, you acquire right, anything on the upside is just icing on the cake, but the cake is going to be pretty good too. I think sometimes people overcomplicate certain things, and I think having a base way of looking at, you can create a great return on it.
There's opportunities out there, but sometimes it just takes time.
I would have started sooner, and I would have found somebody to guide me sooner through that process.
What's going on, everybody? Welcome to another episode of the Commercial Real Estate Blueprint Podcast. We're excited for today's guest. We have Frank Rizzo with us. He's a co-founder of Stone Capital Investors, and they focus on manufactured housing and mobile home parks across the Southeast. So we're really excited to hear about what you guys are doing, and then also how, the average beginner investor can get into mobile home park investing and what tips you have for them. So thank you so much for coming on the show. We appreciate it.
Gentlemen, thank you for having me on.
Yeah, no, absolutely. We were talking a little bit before the show. You said you're from New York, and today's a little gloomy, but for those who don't know much about you, give us your background and.
Sure. I've been in real estate for right now 25 years, not to date myself, and kind of went throughout the entire journey where, as an agent and then as a broker, and always with a focus on alternative investments, whether it was distressed property, wholesaling, flipping, and eventually moved into the manufactured housing space a little over a decade ago by happenstance. I mean, I don't think most people who I've spoken with in this space, it's by happenstance that they find themselves becoming a mobile home park owner operator. But from the development side of why I wanted to be in real estate and the cash flow side of putting, really transactions together, and then the impact that we see that our investment has, it was something that really spoke to me and my partner. And once we got involved, we essentially got hooked and we were able to grow. We've been involved in about 27 different communities throughout the Southeast and build out a platform that's focused solely on manufactured housing investing and redeveloping and turning around, trailer parks into affordable housing communities for people.
Yeah. So you say, a lot of people in this industry come into it by happenstance. Like, what were the dominoes that fell that kind of got you into mobile home parks specifically?
Yeah, that's it's an interesting segue into this space, because where my focus had been in alternate investments and in single family housing, whether it was buying distressed property, renovating and reselling, or finding small multifamily, I was working with a family who, salt of the earth people came in, first generation immigrants, had a portfolio of multifamily in New York City that was, while physically occupied, economically, they were at like a 45% credit loss. And in helping them through that situation and through some of their, the debt situations that they had. And as they were moving out of New York City and relocating down south, they asked us to kind of help find a way to replace that income. And as I started looking at different opportunities for them, what kept popping up and kind of registered were these mobile home parks, which at that point I knew absolutely nothing about. But from a thesis of what we saw, it was affordable housing, right? So it was the most affordable housing stock, which made it very recession resistant because we were coming out of the Great Recession at that point. So you had a very sticky resident base where if you had a community that was well run, statistically, people would stay on average 17 and a half years when they own their homes in that place. And quite frankly, there's a finite amount of them, right? There was only about 44,000 parks nationwide. And most of it was mom and pop, it still is most of it mom and pop dominated. So as I started looking at those factors, I said, well, I think this is something that you guys should explore and maybe something that you guys should invest in. And the only way they would do it is if I did it with them. So that's kind of like helping somebody, trying to help them find a place to invest, and then staying involved with them to do that led me to realize that what a great business this really is.
That's awesome. Pretty cool. So you were able to jump in on the principal side, like they asked you to essentially jump in to help manage it. Like you found the deal, underwrote the deal, showed them the deal. They probably brought the money to the table, and then you kind of helped manage it. Is that kind of how it went? Okay.
Correct.
Cool. Yeah.
That's awesome.
We're blessed Yeah, we were blessed to be able to do something similar to that. And it's a great way to jump in. Question. So you mentioned that you were a broker as well. How did you kind of toe the line of broker owner, or was it kind of like you had a really good client that you were able to just work with that one person? Like how were you able to toe the line of broker owner?
And I've had this conversation with agents along the way. I mean, if you look at the brokerage business or that section of it, it's really just a segment of the real estate industry. Right. And you have to look, if you're going to be in the real estate industry, you got to be in the real estate business. And so you're using the transaction as your kind of entryway in. And it becomes a great talking point because when you're a real estate agent or you're a real estate broker, everybody wants to talk about real estate. Everybody needs a place to live. Everybody heard a story of somebody who, made money in the market or lost money in the market. So it becomes a great conversation starter. But to your point, Jesse, about towing that line, it's how you identify and set expectation with your clients first. Like, I'm going to look out, I'm going to find you opportunities. Here's opportunities where I fit in, right? And here's what I'm going to bring to the table if we do this. And then holistically, not looking at it from a transactional point, but looking at it more from a relationship standpoint. And one of the things that, my office and I did when I was more on the brokerage side is I would give analysis based on the fact of here's what I would do if I owned it. And if I didn't believe in the deal on the investment side, here's the numbers don't lie. And if it doesn't make sense and economically, then let's have a reason why you're buying it, and sometimes, and you've seen it, I'm sure as an agent, sometimes people buy things that don't make economic sense, but they just like the fact that, hey, I bought the building down the block from me. And how much is that comfortability worth? Is it worth getting a lower rate of return on your money just because you can drive past it every day and wave to the bricks?
Yeah. Going back to that first property that you partnered in, what was it like? Let's say, look at it from our audience perspective. They maybe have some money they want to invest, or maybe they're coming from residential and they want to switch into commercial. Like, sell them why you sold your clients on mobile home parks.
So my positioning on the mobile home parks from my clients at that point was, here's an opportunity to create a passive income stream for yourself. If these communities are run correctly, right, do not require, you can eliminate a lot of variable expenses out of them, right? So when you own a building, right, or you own, say, multifamily, you own all the issues under that roof, right? If there's a leak, it's your leak. If an apartment needs to be turned over and you have to paint it, you have to do that. Carpet needs to be changed, you have to do that. But for us, in our model and what we do, we own the land always. But when we acquire homes, we look for residents to own the homes that they're living in, right? And when people own the homes, it eliminates for the owner of the property, it eliminates a lot of variable expenses because, Graham, cutting the grass is cutting the grass, whether I have one person or 99 people. Paying for streetlights is paying for streetlights regardless who's in there. Once I pave the roads, I pave the roads. Like, if I put in amenities, those become fixed costs. In that variable of needing somebody in there to do all the little fixings, I can eliminate that over time. So that becomes something that's very scalable, that you can duplicate, and it can allow you to enter into different markets or avenues with the same system and process, almost like a fast food franchise, right? So that was part of my value proposition for them to take a look at that space. And then, over time, with them, obviously as the test case, we've been able to fine tune that process over time to allow us to scale.
Yeah. We've had, I think we've had one or two other mobile home park guys on the podcast, and there seems to be a trend where they say they learned pretty quickly that you have to go through these bigger parks. Like, if you buy a 5, 6, 7, 8, 9, 10 unit park, it's like potentially not worth your while. So I'm curious, on the first deal that you guys bought, was it a bigger park? Did you jump right into it, or did you buy something smaller, or what do you recommend?
So that's an interesting point. And, we look at, there's a case for maybe some smaller parks in the portfolio, depending on where you are. That first park we bought with the family was 89 lots. The first park that my partner and I bought subsequently after that was 31. And to your point, the work is the same, right? It's just adding another zero to it, right? So the work is the same. So you might as well look for something that has a little bit more scale, because you can mitigate some of the costs that you're going to have across more units. And we're in a business of nickels and dimes, right? Where, nationwide, I think the average lot rent is about $683. In our portfolio, our average lot rent is about $405, right? So we're not talking about a big number. And so when you're talking about a 10-unit park, there's not a lot of room there, right, for expenses or improvements. But when you have 100 units and you're at that number, it gives you a little bit more flexibility. So in that instance, scale is important. So we tend to look at communities. If we're entering a new market, scale is hugely important. But once we're there, we find that we can look at parks that might be between 30 and 50 lots, and it opens up because we already have a presence. But if you're going to enter into a new market, you have to do it with scale, because it's the only way that you can make the economics work.
That makes sense. And when you say that, you're just talking about like potential property managers, and then you have vendors and contractors who go out and do the things you need them to do and stuff like that. Is that kind of what you mean?
Yeah, exactly. I mean, what we found, and this has kind of changed in the last 10 years, and I think it's changed for a couple of reasons, but, even in a community where people own their own homes, it's important that you have a presence, right? And that presence is typically, if you're not going to be there and you're not going to be the person being the eyes on the ground, is to have a capable manager that's going to be your brand ambassador, right? And where things have gone over the last 4 or 5 years, 10 years ago, you could probably have found somebody who was willing to do that work, who lived in the park, maybe got some concessions, maybe, did it, at a great rate. But where pricing is gone just across the board, you've got to pay quality people, good wage. I mean, that's a reality. So yeah, I mean, that helps to do that is if you have scale. It's tough to pay somebody, what they might deserve if it's only 10 lots.
Mm-hmm. This is something I'm always curious. I asked this to one of my mentors kind of starting out, and I know it varies massively by asset class, but like if you buy like a 30 unit mobile home park, what kind of cash flow can you expect from that? Like, and I guess, how are you structuring, or how would you recommend structuring the deal? Would you have somebody like for there's two groups. There's people who syndicate, they'll raise money from friends and family and stuff like that. And then there's also people who we've seen a lot of people who do all this stuff by themselves somehow, where they may not have any money, but they just figure out creative ways to buy a deal. Which way would you recommend someone to do it? And then, is there a good amount? I assume there's a lot of cash flow in these assets, since I've heard people talk about how they're cash cows. So kind of talk to us about that.
Okay. And I think starting out, and you guys could probably attest to it, starting out, I didn't have money behind me. Right. I didn't have a family that came from money. My father was a blue collar worker. I watched him get his GED at the kitchen table. Right. So, you have to be creative. Right. So we've done a lot of different options to get things started, or where I started my real estate career, whether it was wholesaling, whether it was flipping, whether it was lease options, and be creative in structuring those deals and opportunities till you've kind of built up a little credibility with people, and they've seen that you've had some success, and then you're able to kind of access those, the friends, family, and a network of high net worth investors who want to participate in you as you grow your platform. And so we're fortunate to be at that stage, and we've got a very good group of people who've been with us, and they've been able to refer other people to us to allow us to expand and grow, because at some point you're going to run out of your own capital, and you guys will see that. I'm sure you guys are buying your own properties now, and your money will go, even if you're successful, your money will only go so far.
Yeah.
But what you have is a knowledge and a skill and a trade that most people don't have, because you guys are probably narrowly focused on real estate and building commercial real estate, and that's a value, and people will want to participate in that. So eventually people are going to want to join your platform to see exactly because you're spending 12 hours a day doing something that they might only look at 20 minutes a day, right? And that's just going to put you so far ahead of them. So I think that's key. Now, for us right now, we tend to find value. I don't know how you guys, we're like deep value add investment. We're buying typically things that have been left aside, maybe, rents are really below market because the infrastructure or the work is really below where it should be. So for us, we look at it as buying a failing business. And so you've got to stabilize that. You've got to, you've got to invest in that. So we always plan and we set expectations that, hey, on the front end, we're going to make these investments to get us closer to market. Maybe we're going to bring in homes to infill the vacant lots. We're going to make some improvements that are going to drive the cash flow up, create additional income streams inside of that community before we're going to start to see those key outcomes, which is, creating that cash flow. But once you get it there, it's a very sticky resident base, and then it becomes a very high cash flowing asset. So, I mean, there's different models. I know some people buy stabilized and they're happy with a smaller yield, and that's fine. For us, we like to dig a little deeper, force that appreciation in that asset, create that value inside there, and then turn that into cash flow. So, for us, that becomes part of the process towards the end. But yes, you can, once that gets there, you see a very high yield on cost.
Gotcha. For people that are looking at these deals or looking for a deep value add or just, some general value add, what are some of the numbers that matter most to you? And then how are you approaching these parks? Like, I'm assuming some of these parks have to have, when you buy them, park owned homes. Like, how are you dealing with that?
So, there's a lot of, what we found in the space, Jesse, is there's a lot of nuance, right? And so that's why once we got involved in the space and the deeper we got, the more we said we had to really narrow our focus just into this. And we kind of pivoted out of other things that we were doing. So to that point, you can find sometimes you find the park with a lot of park-owned homes, right? And then you have to, we place a value to those homes, and then we look at ways where we can divest of those homes, and what's that value? What is that going to bring to us? When we look at a community, especially in a new market, we run it through a couple of different filters, right? Is that community occupied? Is that community, do we have to infill it, right? If I have to infill and bring in new homes, I need different demographics. I need a different velocity in that city and county in terms of growth and economic viability. So, I mean, we run it through our filters to make sure that it fits our criteria. And then ultimately the plan is always the same, right? We want a community where residents own their home, right? Because that, they have that pride of ownership. We're creating a pathway to home ownership for those residents. And then we can do what we do best, which is focus on improvements to infrastructure, improvements to the resident experience, adding in amenities to drive that value, right, to us. So, we'll underwrite the deal based on the specifics, whether it's park-owned homes, whether it's resident-owned homes. And then ultimately we want to see, that we have a community that's all owned by homes are all owned by the residents. And we want to know that we're getting comfortable double-digit returns in terms of our yield on cost, unlevered, right? Mm-hmm. So when we go in there, and then once we can add, especially now with rates, once we can add leverage, that only make the returns better and makes it a better investment all around.
Yeah, that's awesome. For sure. Yeah. You said something that's interesting. You said, you guys are, very deep value add guys. So basically, you're getting these properties like very distressed and at really good basis. I kind of find myself thinking like we've done a couple deals, like I mentioned to you, and we got them at discounted prices for sure. I'd say maybe 70 to 80% below market, which is awesome. But I had a conversation with a guy last week and he was telling me about some of the deals they were buying. And it made me realize like we can get these deals that are 70, 80% under market value. And that's good. Those are, the base hits people talk about. But there are a lot of heavily discounted deals out there. You just have to kind of open your eyes and we're looking at a pretty tight area, but what I learned from him is he's looking all over the place. And when he opens up looking all over the place, he's finding like severely discounted deals. Like, is that kind of what you're seeing when you guys are looking? Because I know you guys cover the Southeast, but is that how you're able to find these really deeply discounted deals?
That is part of how we're able to do that. But to your point, Graham, the way you're looking at it now is, I would say, is a great blueprint for people who are looking to start in, because at the end of the day, you want to go in and eliminate as many variables as possible when you're first starting out, right? Mm-hmm. Like, so, yeah. Because then it builds your core competencies, you build your systems, you build your processes, and then you can add another variable, right? Mm-hmm. So you're almost looking at this as like an equation, right? How many variables can I eliminate first? And, if you're starting out and you're getting singles and doubles, hey man, singles and doubles win the game, right? Mm-hmm. And as you progress, that allows you to dig a little deeper, because your processes get refined, your people get more in tune to what you're doing, and you could add a little bit more. So right now we're comfortable. I mean, listen, we love if we could find something that's low bandwidth, low brain damage, and get the returns we're looking for. But we're also not scared of rolling up our sleeves and doing the work. And I think especially when you have a market like we've seen in the last 24 months, where you had some, and I'm sure you've probably seen it, right? You're in a great market in North Carolina. You're there. I mean, yeah, the rates were up, but you have a lot of activity. You have a lot of people coming mm-hmm. there. You still have the velocity of, your population growth. So you haven't seen that price decline, right? Mm-hmm. And it's been so finding, opportunities has been a little difficult, right?
100%.
And so in that environment with rates where they were, we looked at, well, you have to look where other people aren't, and you have to dig a little bit deeper if you're comfortable doing the work. We don't want to take on things that we're not comfortable with, but if we're comfortable doing that work and we can underwrite it and project it and have the team in place to do it, then we're willing to do it if we can get it at the right basis.
Yeah, no, that's such a great point. We've been in like you said, the Raleigh-Durham market, and it's been insane. Like the transaction volume dropped, a good bit, just like across the country, but not as much as other places. But people are still doing business here, and prices basically didn't drop, maybe like a little bit, but not really. So to find good deals, we definitely had to look outside of the market. We went to another market in North Carolina. That's where we picked up two.
What is up, commercial real estate investors? While you're listening to this podcast, serious investors are already booking their flights to Cleveland. They know what's happening August 15th through the 17th at the Key Tower Marriott in downtown Cleveland. Commercial Academy is going to be live. It's going to be back. 3 intensive days with J. Scott Shield, Sean Katona, Jared Elmar, and hundreds of active commercial real estate investors from across the country are writing checks and closing deals at these events. The one in August, if the 15th to the 17th in Cleveland, I'm going to be there. Graham's going to be there. You're going to be witnessing all kinds of alumni breaking down deals, seeing real stuff happening live time. We're going to be in the room with J. Scott Shield as he unveils all his keynote presentations, his classic state of the market intelligence report, the kind of insider perspective that positions you months ahead of market shifts. Right now, your biggest competitors are texting Blueprint to 888-653-1199, and they're getting their seats, their networking opportunities, and their competitive advantage. The question is whether you're going to be at this event or not. Like I said, me and Graham are going to be there. So don't watch from the sidelines. Text Blueprint to 888-653-1199 to lock in the lowest possible rate. And if you register before Friday, June 20th, we'll have an exclusive Commercial Academy gift waiting for you in Cleveland. Remember, it only takes one deal, one time to change your life forever. We'll see you in Cleveland. Attention commercial real estate investors. What if I told you that in 72 hours, you could walk away with the complete blueprint that's creating millionaires in commercial real estate across the country? That's exactly what's happening August 15th to the 17th at Commercial Academy Live in Cleveland, Ohio. This isn't your typical real estate seminar. This is an intensive immersion where Commercial Academy's ambassador, faculty, and alumni have done over $1 billion of assets in their active portfolio. They're going to reveal the proven playbook for identifying distressed assets, structuring win-win deals, and turning problem properties into profit centers. But here's what's going to make this event truly different. You're not just learning from a few people. You're going to be meeting Commercial Academy founder and CEO, J. Scott Shield. And when he takes the stage for his exclusive State of the Market briefing, you'll get the market intelligence that positions you to capitalize on opportunities before they come obvious to everyone else. The reality is simple. Commercial real estate investors across the country are registering, and they understand while others are still thinking about it, they're going to be actually taking action. We talk about that all the time on the podcast. So don't get left behind. Text Blueprint to 888-653-1199 today and secure your seat. Register before Friday, June 20th, and you'll receive an exclusive Commercial Academy gift when you arrive in Cleveland, but only if you act now. The deal that changes your financial future might be one conversation away. Make sure you're in the room where it happens. Again, text Blueprint to 888-653-1199 because it only takes one deal, one time to change your life forever. We'll see you in Cleveland.
Several properties there. We actually just went under contract on one last week, which we're super excited about. So we kind of realized there's not as many people looking in this market. It's a tertiary market, but we actually are able to find deals that pencil here. And right now we're going after cash flow. So if we can get these cash flowing deals, they might not appreciate as much as if we could buy something in Raleigh-Durham, but they're cash flowing right now. So we're our strategy is build a base portfolio there. Once we get, like you said, the reps, get our systems in place, get our contractors in place, understand how to do all this stuff, kind of build a track record, which is our goal, and do a couple more buildings there. Then we can go out and start looking in, higher value markets or different markets or whatever. But that's kind of been our thought process. Do you think that's a good strategy, or do you have?
I listen. I think we took a very similar track where we said, okay, we can go into certain markets where our dollar can stretch a little bit and we can create some of that cash flow. And we were comfortable where we could become, we can get our competency there. We can become really key players in a market because look, at the end of the day, housing is so essential that even if if you buy it right, you acquire right, and you underwrite correctly. I mean, I'm sure I don't know the markets you're talking about specifically, But I'm sure if you looked at, hey, I'm not looking to set the market rate in rents, right? I'm looking to guide things to where it needs to be to create that value. Anything on the upside is just icing on the cake, but the cake is going to be pretty good too.
Mm-hmm.
So if you're able to do that, that's fantastic. I think that's a great starting point.
Mm-hmm.
And that builds your base, right? You build your base, and that allows you to kind of to grow from there. What are some of the metrics that you look at just to get an idea of like your underwriting standards, where you're looking your returns to be?
We're pretty simple guys, like very simple, maybe too simple, but we're just looking at basically like we have a spreadsheet that the firm we work for uses, and that's kind of what we've adopted as our primary underwriting tool. But it's looking at all the basic stuff like your cash on cash return. We're looking at the spread between the cap rate is kind of one of the biggest things because that indicates your cash flow. But obviously for people listening, if you don't know, cap rate is a great back of the napkin way to look at value, but it only really gives you a snapshot of that year. So like the cap rate is just the return you're getting on your money for that year without any debt. So we're not really looking at yield or IRR right now. We kind of have it in the back of our head, but mostly just looking cash on cash and then the spread. So like rough rule of thumb is if we can get something that, our interest rate's 6%, and then we can once stabilizing it, get it to like a 10 cap. So a 4% spread, then that's going to be a good deal. Very, like I said, very, very simple back of the napkin stuff.
Yeah. Something else to add to that is how much value we can add to the property. So like our biggest thing has been, it's not really what we've been going after, like Graham mentioned, but, finding single tenant buildings that either are vacant or have people that are just paying extremely under market rent and getting somebody in there at market rent. And that's adding a ton of value in and of itself.
Mm-hmm. Yeah.
And you those opportunities are out there, right? For those of you that look for it, because there's plenty of times you'll find, you come across owners that they bought a property 20 years ago. It didn't bother them. Right? It wasn't their business. They didn't run it like a business. They ran it as, hey, I just need a place to park some capital. And then you go and you find out that they haven't raised rents in a decade. Now, the property is substandard, right? Because they didn't have the money to reinvest in it. But the resident didn't complain because they were so far below market. But now, they'll become a natural time where people transition in and out. Now, once you bring that to market standard, you should be able to capture that additional cash flow.
Yeah.
And to your point, man, I think sometimes people overcomplicate certain things. Mm-hmm. I think having a base way of looking at, this, you can create a great return on it. I mean, it's not overly. We tend to overcomplicate things, right? Yeah. Like, so when you look at things from where it is, I mean, and you have a model that works, I mean, that's fantastic.
Yeah, absolutely. And another huge one for the people listening that I didn't really know until I joined the firm I'm at now. I mean, I knew it, but I wasn't paying close attention to it. I think it's just a great, real quick, rough indicator of value is looking at your price per foot. So if you can get something at a really good price per foot and it's like well below replacement cost, generally speaking, that's going to be a good indicator of value. So like we bought a building, most of the buildings we're buying are around $40 per foot, which is crazy. So like we're buying industrial buildings at $40 a foot. And if we were to go rebuild that building now today, probably be, I'm not a contractor, but roughly probably like 140, 150 a foot, something like that, maybe more. So if you could buy something existing at such a low price, it's just generally speaking going to be a good deal. And we did exactly that right now. So the deal we have under contract, I won't go into too much of the specifics because we still have it under contract. We got to close it and stuff, but it's a owner who's an older gentleman. We built a relationship with him. At first he said absolutely no seller financing, but we kind of slowly continued the relationship, didn't ask too much. And then later we got him, he agreed to actually do seller financing because it's going to help him with his taxes. So older guy, he's doing seller financing for us. It's a building he's had for 20 plus years. He actually built it himself. Yep. And the tenant's been there for over 20 years at substantially low market rent. Jesse went in there yesterday. I wasn't able to go, but he went in there yesterday and the building's like pretty much mint. It looks like they built it like over 20 years ago, but it's in phenomenal condition. So like you said, there's opportunities out there, but sometimes it just takes time. So we're really excited about that one.
Just for reference, I've been talking to this guy for over a year.
Yeah. Mm-hmm.
And it's one of the keys of, always having a pipeline. Having, and you always have to have your ear to the ground, which is, one of the advantages of being in the business or being a broker or being an agent. You're just constantly in and around that. So that's a lot of the value. And I see it with even the people I work with. I mean, they're running their own business, right? Mm-hmm. But my business is to know what's going on, where the opportunity is. what the opportunity set, and how do we drive value out of that. So that's great. Congratulations and good luck on that. Good luck on that deal.
Thank you. We appreciate that.
Yeah.
We appreciate
Thank
that.
you.
So if you were talking to somebody, and they want to get into mobile home park investing, and you were to hand them like a buy box sheet of what they should go out and look for on their first deal, like, this many units, you should look for this area, needs to be on city water and sewer, the parks need to be owned by the tenant, or excuse me, the homes need to be owned by the tenants, or whatever it may be. What would you suggest them to do for their buy box for their first deal?
Well, the first thing I would take that one step before that. The first thing I would do is make sure that you're clear on a business plan, on what your expectations are, what work you're willing to do or not willing to do, right? Where your comfortability is, right? So you have a clear understanding of what that entails, right? And how you're going to do that once you do own the property. And I would just preface it by eliminate as many variables as possible on your first deal, because there's going to be things that are going to pop up that you just don't expect. I've been doing this for 12 years. I go into a community, we underwrite, we spend time in diligence, we look at this, you close on the deal, and all of a sudden something happens that you just didn't count for. That's part of life. That's part of buying any business. That's what's going to happen. Mm-hmm. But if you can eliminate as many variables as you can on your first transaction, it puts you in a position of comfortability to move forward. So make sure you understand the market that you're in, right? Mm-hmm. If you're going to, because a lot of times you're not going to buy a park in your hometown, right? So make sure you have a comfortability in the market you're in. You understand who your competitors are, mm-hmm. right? What their price points are, what they're offering. Super key, right? Whenever we go into a market, we want to drive the neighboring parks and see exactly what are they offering at this price? What are they offering at this price? Where do we fit into that value proposition, right? That's one. Eliminate as many variables as possible. And then find a mentor, find a coach. There's some resources out there, and be able to pick their brain along their way, because you're going to hit things that you're not going to know. And so to go back to your buy box, if you have your business plan done, say, I'm expecting to get, if I'm going to invest $100,000 at the end of the year, I want to get 8,000 back. I want to have an 8%, return on my, like this way, where I can offer, what I could be, how much work has to go in to get my yield on cost. And I would just be very specific with that, and try to eliminate as many different variables as you can day one. So you can walk in there with a clean slate and open mind to get the process done and the park up and running.
Okay. So I'm going to go opposite of Graham. What are the pain points you think for first-time mobile home park buyers?
There's a thesis, right, that when people own their homes, that I don't have to do anything. I can step back and it's just passive cash flow, right? That is the understanding in this part. And what we found, while yes, they own the home, you can eliminate a lot of variables, there is a lot of touch points, because you're not really just buying an investment property, you're buying a community, right? And why do people live in a community? Because they feel like they live in a community. And if you don't create that engagement with your residents, then it becomes very transactional, right? So to the point where we were talking about being an agent, talking about your clients, and those residents are your customers, and you have to maintain that community feel and engagement, because the reason why people stayed in substandard communities, or what I would think was a substandard community, and paid, not just because they paid low rent, it's because they felt an attachment to that community. And if you pull that away and just say, hey, I'm just looking at a spreadsheet, I'm going to move rents there, and I'm not going to create that bond that the former owner had, kind of like on your building now, where the former owner probably knows the same tenant for 20 years. If you don't create that bond, then it becomes transactional, and your resident will leave. So your pain point is, how do I create community engagement from a distance and have those touch and feels without doing it by, I'm not going to be the guy that's cutting the grass and saying hello to Miss Jones every morning when she goes to the store. So that's something that you have to overcome and figure out how you're going to do that. There's ways to do it, but that's something that you have to make sure that you keep that sense of community. It's super important, because this is very relationship, and it's still a people business, right? You got to focus on people.
Mm-hmm. Yeah. Okay. So You basically said, prior, make sure you have your business plan, set the expectations clear with yourself about what responsibilities you're going to handle, maybe what responsibilities your investors are going to have, or what responsibilities your management team is going to have, and all that. Once you get all that stuff set up and then you're ready to go, going back to that buy box question, what would you recommend somebody to start off with?
I would probably recommend that somebody would start off with have somebody in place, like a mentor in place that you could work with to answer some questions. That's super important. And if you're going out there to buy a park, listen, you just got to do it. The best teacher is going to be also the experience. So if you're working with somebody and you're partnered with somebody, make sure that they're going to share with you what they're doing and how they're doing it. But, Graham, there's no, if you buy 30 lots, it's going to be perfect, or 50 lots, it's going to be perfect, or 100 lots, it's going to be perfect. It's, hey, I'm ready to do this. Here's what I want to do. If I'm working with somebody, I want to make sure that I'm going to get a clear look in terms of what, when, and why, and how. And if I'm doing it myself, I'm going to jump in with a plan in place, eliminated as many variables as possible. So if I'm not comfortable with septic, I'm doing city water, city sewer, right? There's a case to have septic, but if I'm not comfortable, let me do city water, city sewer. If people own their homes, that's fine. I wouldn't get so narrow on all of it, but I would just be comfortable with being a little uncomfortable and, getting the process started.
Awesome. What are you guys using as an acquisition strategy, and, that somebody could go out and use in the beginning? Some things we see are obviously build good connections with brokers who are doing who are primary focusing on the mobile home park business. You can do cold calling, you can send letters, you can go walk parks, you can go try to find the owner that way in person and door knock. What are you guys doing to find these deals?
Right now, we're doing a little bit of it all. I mean, I obviously believe that, especially starting out, your brokers are your best resource, right? So I've talked to people who haven't bought a park, but they have an acquisition team, and they've been paying an acquisition team salary for 6-7 months with zero results. And if the idea was that, hey, I'm going to save a broker fee, well, you just paid it to somebody else, right? So brokers spend billions of dollars. They have billions of dollars that they're spending for data, for resources, and they're going to be a great spot and learning opportunity. And I'm not speaking just as a broker, but just even from my own experience of working with some of the brokers in the space. We actually put out an ebook about that, like how to leverage brokers to find your first deal. So I think that that's a key point, that you should find a broker who specializes in manufactured housing and have them work with you. Now, to do that, you should have your buy box clearly defined, how you're going to buy it, capital you're going to invest, debt partners lined up, and so you're ready to go. But we have found that, you can talk to an owner, and if you're cold calling, they're getting 100 calls a day from people, right? So it's going to be a challenge getting through going through the noise of all that without having that experience. But when you do that, or when we did speak with owners, we're just forthright, and when I'm in a market, I end up knowing all the community owners around there. And then it becomes a little bit easier to find those off market deals, because if I'm in a market and those owners know me, all I ask is on their first call and their last call when they decide to make a decision. And I've found some good opportunities that way as well. But
yeah.
For those of you that are listening, I would say, your broker is probably a really good resource, and most brokers are really worth the fee that they're going to be making.
Yeah. You said something earlier that I absolutely love, and me and Jesse are, big proponents of, but you said there's no perfect way to do it. You just gotta do it. So like something I tell people, because we have a lot of new brokers at City Plat, and they'll ask me questions or something, because not that I'm the best broker, but I've just been doing it a long time. So they'll ask me questions and stuff, and it's just like activity breeds activity. So if you go out and you take action, like you were just talking about, you go out and buy a mobile home park in Kansas or whatever, whatever market. You go buy a big mobile home park, and then you turn it around, you do a really good job. The residents are happy. I see the quote on the wall says the entire park was turned on its head when Frank Rizzo arrived, right behind you. So that's cool. They were happy about that. You get a reputation. Somebody sees you bought that. And then guess what? Brokers in that market are going to say, oh, this guy just bought that park. He turned it around. And then other owners are going to say, he just bought that park and he turned it around. And then you're going to get approached, and people are going to say, hey, I have this park. I was thinking about selling. Would you be interested in it? And you're going to become a known buyer, and you're going to get an opportunity that way. So the fact that you took action showed other people, that you're a viable buyer, and then you get more opportunities that way. This happened to us. We bought a building in the market I was talking about, 2 of them, and a broker called me, said, hey, I saw you guys just bought these 2 buildings. Would you be interested in this one? And we ended up going and touring it and stuff, and we didn't end up getting the deal because the owner was going through some kind of lawsuit or something. But just the lesson is that if you go out there and take action, you're going to get a lot more activity than just sitting there and analyzing deals and talking them the talk, but not doing anything.
Yep. I think that's a great point. And then I also think that, in setting the expectations, and I would say this, if you're getting involved in this space, whether it's a real estate investment, mobile home park, multifamilies, you're looking to do this long term. Your first deal doesn't have to be the home run. To your point earlier, like, have the expectation that I'm going to go in there. I know I'm going to make mistakes. I don't want to, you're not going in there to lose money, but if I could make a little bit of money on the first one, I mean, that's like going to college and it paid you a little bit. That's fantastic. This is your learning experience. This is your learning ground. This is your training ground. Go do something where you could make those mistakes, and the second one is going to be better. And I'll put it to you this way. Our first deal that we did with outside capital, I mean, it was decent. It was like a 15.6% return, average return for our investors. Decent, but our second one was tremendous, right? Because all those mistakes we made in the first one, we didn't make the second time. So that's where you fine tune it. But the second one, was a park we bought at 425 and we ended up exiting at 2.6 million, right? Like, that's the second one. The first one was okay, cash flowed, it did this, it was small, it was capped it was okay. But the second one was, game changer. And you have to go in there. You can't go in there thinking, all right, the first one, I'm going to retire off this. And I think if you went in with that mindset, you're going to be disappointed.
Yeah, that's a great point.
So you talk about, owning and managing these as like a business, right? What does your team look like, and how much of it is third party? How much of it is farmed out, if you will?
So we learned early on that if you want to control the product, you have to control the process. We have our own team that we built out overseas. So we have 11 people overseas that do all different touch points for our residents in different departments. Our typical community would have an on-site manager, part-time maintenance person, and a groundskeeper. And then we try to cluster our community so they can rotate. And this way you have one community that can handle a few different people. So overall, we've got about 41 people in our ecosystem that are working with us, which is great. We have our executive team, my partners and I, and then probably about 41 people inside from overseas and on site.
That's an interesting mix, but I think it makes a lot of sense for what you guys do, because you guys also have a podcast as well, and you've got a lot of content stuff, and just I'm sure there's lots of stuff to battle there. Curious, what made you guys start your podcast? Ours was kind of like to document, but I'm curious why you started yours.
So interesting point. We would tell people these stories that we had, and people were like, you got to document it, you got to share it. Same thing, because we had all these interesting stories of us kind of coming from one culture going into a different culture. And then secondarily, we see a lot of people who were coming into this space or interested in manufactured housing. And we thought that there was some misinformation out there or some maybe lack of clarity of information. And we thought we could give our perspective or share our perspective and bringing some other industry and invite insiders there. And on top of it, I obviously love the medium, and it gives me the opportunity to meet with some really interesting people, and I learn a lot from it myself. So selfishly, I'm also getting the opportunity to learn from other people and what they're doing and their vision on the space, and see how all that aligns. So to have that platform really worked for me, and I have a passion for doing it. We also have a video series, which is kind of like our video documentary of what we do and how we do it on the ground. So if you guys watch YouTube or you're on YouTube, you could watch Trailer Park Turnaround, which is it gives people a bird's eye view. And for the people who participate with us, like our investors and everything, it's, that's great transparency. Like, hey, this is the park we bought. This is what it looks like. This is what we're doing, and this is what it takes to make it happen. So they get a good insight in terms of that as well. So we're trying to touch a lot of the bases that way.
Yeah. If you guys are listening and you're just starting out and you're thinking like, oh, I don't have anything to talk about or whatever, I don't want to do a podcast or I don't want to do content, or you think it's whatever. Honestly, it's been such a game changer for us. We were fortunate enough to, our first guest with me and Jesse together was a guy named Rich Summers, and he's blown up. He was big when we met him, but he's blown even more since then. But he told us, he was like, the content is the business plan. He's like, that's the first and foremost, like making content, doing the podcast, like that's the first step. And then everything else just benefits from it. We've definitely found that to be true. I get reached out to probably 2 to 3 times a week talking about, hey, I saw you're buying these deals and I was curious if I could ask you these questions, or, hey, I want to, buy these deals, or, hey, you build trust.
Yep.
You build a potential investor base, and then people just see what you're doing. Like you said, the transparency, and people get to know you. It's insane. It's really crazy, the power of it.
And what's happened for us is we found opportunities from it. We've had people contact us like, hey, I didn't realize you were in this market. I have something else for you. Right. And when you have that platform to do that, you should, it's a great platform for there of sharing ideas, of collaborating with other people, because I've been able to like talk with you guys where, hey, we're in North Carolina. You guys are now, now I know that you guys are in Raleigh. We're in Jacksonville. We're in Hubert. We're in Laurinburg. If there's a way that we could collaborate, maybe there's an opportunity down the road. We never would have done that if we didn't do this today.
100%. And Jesse's eyes lit up because I know what he's going to say. We got what, 2 off-market mobile home parks in Jacksonville, Jesse? Mm-hmm. We'll have to discuss with you after the fact. But
yep.
So yeah, we've got some stuff. You're exactly right.
So that's great, and I would love to hear about them. Also, we'll share with you where we are and see if there's some match there.
100%.
Okay, for sure.
And to your point, just about finding deals, we're hopefully closing either the end of this month or the beginning of June. We're closing on a retail center in the Triad area that came from social media. I posted me and Jesse taking pictures of another retail center that we were trying to list and said, if you've got any retail centers in this area, we got a lot of buyers. And we also have a lot of off-market ones right now. And somebody messaged me and said, hey, I've got one. We want to sell it. They showed it to me. I showed it to my clients. We went and toured it, put in an offer, and we're going to close on it, which is, going to be a commission. So whether it's brokers, whether it's investing, whatever it is. And I almost didn't, the moral of the story I was telling Jesse, almost didn't post that because like sometimes you get doubt, you have self-doubt of like you're about to post a video and you're like, oh, this is stupid. People are going to think this is stupid. But then it turns into something and you're like, who cares if people think it's stupid? It's helping my business, helping my brand. So the power of social media is, it's crazy.
It is. And you're exactly right. I mean, that's why if you're in business, you have to make this part of your business, right? It has to be part of your business plan.
100%. Awesome. Well, Frank, this has been amazing. You mentioned your YouTube channel, Trailer Park Turnaround, correct?
Trailer Park Turnaround.
Trailer Park Turnaround. So be sure to check out Frank there. I got 2 more things. One, I was just going to say, where's the best place for people to connect with you? If you want to go ahead and let us know.
Yeah. If people could go to trailerparkturnaround.com.
Okay.
Right? And if they want to send us a message, they could send us a message through there. Happy to talk to people who are interested in the mobile home park space, want to find out more about the space or get an idea of what opportunities are out there or help underwriting a deal. We're more than happy to do that. If there's one thing I like talking about is mobile home parks and mobile home park investing.
Awesome. And then the last question I want to leave with is like, if you could tell yourself who, brand new, didn't own any commercial real estate, you're a beginner, one piece of advice that would help you, over the next course of your investing journey, what would it be?
So if I went back to the beginning, what's something I would have told myself earlier?
Yeah. Like if you're talking to just somebody brand new starting out, no experience, what's one piece of advice that would help them? I
would have started sooner and I would have found somebody to guide me sooner through that process, right? I would have found somebody that would have guided me through that process and I would have done a little bit more sooner. Listen, I'm very fortunate and blessed to be where I am today. I'm very happy about that. But, getting an education and getting the activity, to your point earlier, the sooner you do that, the better it is.
Yeah. Great advice. Great advice. Get somebody who's doing what you want to do. Yep. Add value to them. Learn from them as soon as you possibly can.
Exactly right.
Awesome.
Yep. Environment and mentorship is huge.
Yeah. Well, thank you guys so much for listening to another one. Be sure to go check out Frank's website, his YouTube channel. Also, we wanted to make this note here. If you guys have been listening to this podcast for a while, please leave us a review, an honest review, give us your comments, your feedback, and it really helps us grow. I think we have a good amount of monthly listeners at this point, but we only have 4 reviews, I think. So if you could help us out and go review the show, that's what boosts us further up on the chart so more people can hear the podcast and hopefully enjoy this content and get value out of it. So we appreciate you listening, and we'll see you in the next one.